All right, so let's start with the disclaimers. Just to remind everybody here that there's a substantial risk of loss in futures trading. Past performance is not indicative of future results. When you trade, trade only risk capital. If I make references to other um, if I make references to other assets, whether it's stocks or digital assets, cryptos, it is not because I encourage you to participate in them. It's because I just use them as a reference and they're interesting. Also, just to remind everybody that those videos will be on YouTube for your viewing. So just keep that in mind. All right. So today was just a few, before we get to the topic that I want to talk about, today was a very interesting day. Today was the Senate hearing with the whole Robinhood issue that has occurred. And I listened to some of the politicians that we have, in our government. They had a chance to interrogate, or really, maybe not interrogate is the wrong word, but really have a discussion about financial responsibility and what happened with GameStop and everything else and the whole market making. So, I would tell you some of those people that ask them questions are really, really brilliant and they really truly understand how the mechanics of the market works. And some of them, they have no clue, because they were talking about things such as, controlling discussions on Twitter and controlling discussions on Reddit or any other social media forum. And it's just impossible because I'll tell you this, even before Reddit or before Twitter or anything like that, there were many, many stocks in the last hundreds of years that have exploded because of mass hysteria, because of fear of missing out. I mean, we're talking about periods even before that there were newspapers. There were periods that there were no newspapers in the distribution that we have or had. But still people managed to get into hysteria and jump on things and everything else. And I think it's not their responsibility or our responsibility as brokers. I think it just falls on the responsibility of the individual. But I did learn something very interesting today. I learned that there's market makers in the stock market that sometimes give better prices than the exchange, supposedly. And so some of the transactions that go to market makers in the exchange, I understand the transactions have to be in 1 penny increments, and market makers, when they work with and pay for order flow to certain brokers, they can actually make an off exchange transaction. I believe that's what I understood, which was very, very interesting. So stock options have to go through the exchange. That was my understanding. But stocks can come directly from the market maker to your account. And understanding market mechanics in stocks, stock options, or anything else. Hello, Michael. And anything else you work with is extremely important. Understanding the mechanics of how the market actually operates. I'm going to get to that in a minute. Another thing that I wanted to share with you, because everybody's talking about, crypto, and that would lead me to the topic that I want to talk today. I went on the Coinbase site and I looked at the cryptos, right? So we know that Bitcoin is making new highs right now. Some of those bigger ones, I think Ethereum is making all-time highs. But it said that the average holding period for a customer, according to them, and Coinbase, I believe that they're so big that it does represent the majority of the sample. Even there's other exchanges outside the US, they're holding it for about 60 days. That's the average period. Some of them, I think Ethereum was 54, Bitcoin was 63. So really, what's interesting about this, that here you have an asset. All you had to do in hindsight was sit on the asset and just do nothing. And maybe that's the hardest thing to do when you have a winning trade, is to do nothing, right? Because we always have the inclination of fear and greed, FOMO, that always, in this bunch of chemicals that are affecting us. And the reason that I'm sharing it with you is really not to blame anyone for holding it, that, or to say on hindsight, we could all be smart and say, yeah, we should have, right? But the reality is that there's certain human nature that is associated with trading. And I believe that a lot of the things that are happening in crypto are based on a gut feel because everybody's talking about it. The minute it makes new high, it reaches the news, and I believe that people jump in. And then it doesn't go in their favor, and they jump out, and they say, maybe I jumped in when it was too high, right? So I found it kind of interesting that the holding period was that short. I thought it would be it would say something like a year, or it would be a few years, but it's really, it was months. The smaller cryptos, which I'm not even going to get into because some of them are, I don't even know what they do, but some of them had the average of 3 to 11 days, which just really shows you, the nature of people when they jump in and jump out. They're like, oh, this one didn't work out, this one will work out, this one will work out, this one, right? So again, I'm not recommending, to any crypto. I'm not recommending Bitcoin. I'm not recommending Ethereum or any of the digital assets. In fact, I would discourage anybody even to trade them on the future side, because in the future side, there are Bitcoin futures and there are Ethereum futures. But the problem is that the market is working on the weekend and the CME doesn't. So the Chicago Mercantile launched a product that you can't actually trade on the weekend. So if you're short and the market is flying, and it's gapping, there's nothing you can do. And even if you have a stop, it's not going to work on the weekend, and you can find yourself in a really bad situation. So I really, really would discourage you to trade futures on the CME with that. I wouldn't do it. So that's what it is. But again, I'm sharing it with you just to share how human nature behaves. And that would lead me to, to the topic that I want to talk today, is really understanding how traders behave in the futures market. So I'm going to use a little bit of charts here and a little bit of explanation and everything else, so you understand. Okay, so the topic today is going to talk about traders who are trapped in the market, right? So they're standing in the wrong direction of the market, and basically either their stop losses are getting hit, or they do nothing, right? They do absolutely nothing, in the sense that, they're just sit there and they're just frozen, right? So they have a loss that's going against them and they do nothing. They're just trapped. And we're going to get into the psychology of this, and we're going to try to understand it. Now, in my personal opinion, there is no method to detect trapped traders. Let me refine this. I don't think there is a method out there that you could actually use solely detecting trapped traders and say, you know what, I can make money by just finding them all day. I don't think you could do that. But what you can do, it could be part of your method, and remembering when the positions are going your way, because at that point you will either it could either potentially help you max out a position that you're in, or minimize a potential loss, understanding that you're actually standing with a bunch of desperate people who are just throwing the white towel. So, and it's just going to get worse. So at least you'll be one of the early ones out. Um, I would say that it happens every day. It happens on every time frame, and we're going to get into this now. Let's understand what causes that. Now, I don't have all the reasons. I mean, I'm sorry, I don't have all I don't have all the reasons in the world as to why um, it happens at a specific point in time, but or where it happens. That's the thing. I don't know exactly where it happens. It's not like I can look at a chart and say this happens here or it happens here. But there are certain points that they have, in my opinion, some sort of a likelihood of where it happened. So where does it happen? It happens usually on breakouts, right? So there's a lot of false breakouts. So people are looking for support and resistance, and there's a lot of falls of support and resistance, a lot of false small breakouts. So if you have a support level, if it was hit once and it hits now the second time, it could just break it a little bit, and people are like, okay, that's it, it's going short, because those are, remember one thing, and sometimes I say those things because they might sound cruel, but every day that you're in the market trading, you're gaining one more day of experience versus a beginner, right? So you have to understand that the futures market brings a lot of beginners. And what you have to do is really take advantage of those beginners. And that's and that's the reality of the market, because you want to be smarter than them, you don't want to be as emotional in them, you don't want to apply things like they do, because they take everything literally. So they say, okay, there's support and resistance, and they draw support and resistance, and they, support and then resistance, and they say, okay, this is it. And if it breaks it a little bit, they say, okay, this is a breakout. I got to do it. Many times, many times, those breakouts come back right into trading. So if it breaks it the first time, don't get all excited and trade against the trend. Okay, so there's a lot of false breakouts, and at that point, there will be a lot of trap traders, a lot. Okay. The second part where you find trap traders is when there are news announcements. It could be surprise news announcements. It could be planned news announcements. For example, you're trading crude oil, okay? And let's say the price of crude oil is trading at $50, okay? And so more inventories are coming in. More inventories came than anticipated to the market. So your first reaction is, well, I'm going to short it because there's just a lot of supply out there, right? Instead, the market's starting to go up, right? You don't understand why it's going up. You can't comprehend it. You're just sitting there and you're thinking, I don't get it. There's, it's at 50, there's so much supply and it's still going up, right? Well, what I'm going to tell you is that it's not your job as a trader to interpret why. In fact, it's none of our business. It's doing what it's doing, and it is what it is, and that's it. And at that point, if you see the market is starting to go up rapidly, clearly there's two things you can do. Definitely don't go against the trend and short it, or definitely wait for the market kind of relax and see what direction it takes, and that's what I would recommend most of the time. But news events usually drive markets, or they can drive market one way. For example, it would take it from 50 to 51, 52, and they'll all of a sudden reverse and go, 49, 48, 47. So what you have to think about this is what happened in reality. The news came out, and the goal was, and it was supposed to go down, it didn't. So there was a lot of shorts, and they started going up until they got all blown out. The minute they got blown out, there's a new pressure coming in from shorts, and when it went back to 50, then you can say, you know what? At this point, it's probably better to short it because the market went up, it came back down, and it just blew through all the people who were short. I think it's there. We'll go over the chart just to show you, just to give you a few more details, but this is just something to think about. The third part where you will find trap traders is in consolidations. Okay, so again, the first one was in false breakouts. Second one was news traders or news trading, that it can happen. And the third part is in consolidations that happen on the move up and on the move down. So let me Jake, can we pull out the paint for a minute here? Okay, thank you. Okay, so I'm just going to, thank you. I'm just gonna share my screen here. Thank you, Jake. Okay, so um, not the best of artists, but I'm just going to do that. So let's say the market is just trending up, right? And then it starts to do this, okay? It starts to consolidate. Usually, okay, or in my opinion, I should say, I shouldn't say usually, it's just my opinion. What happens during this period, this is where a lot of traders who are impulsive, okay, will think, okay, the move is over. The move is just absolutely over and it's done. And what they do after a big move up, they'll short it. But what you will see on very strong trading days, there are consolidations, and then the market, does this, and then it goes back up. Again, ton um, in that area of I shouldn't in this area here where I'm. If you see me circling, there were tons of short traders that got caught, and they're getting stopped out. They're just getting stopped out left, right, and center, and the market continues to do that. And by the way, those things happen every single day and every single minute in the marketplace. What you want to do is that if you decided to short over here and you see that it broke out of this range and starting to go up, and the trend before was way higher, most likely, most likely, the market will continue. Again, and I should say, in my opinion, I don't know if most likely is the right term, but again, in my opinion, in my experience, and what I've seen from my observation. Now, we can go back here, and the market came here, and now it starts to consolidate again. Consolidates. You know what? There will be somebody who will say, okay, the market will reverse. Now, this is actually a bad form of looking for tops and bottoms. This is really it. This is like, okay, this is the top. And people here who short here, they have a really bad risk to reward ratio. Very bad, because what they anticipate and they start dreaming of this market collapsing. So they could be short, but they think that the market will erase all the gains that day, right? And we just don't know. We're not in the business of predicting. Remember, I always say trading is not about predicting, it's about risk management. So from here, again, if you were short and the market continues, get out. If you see this happening all day and those consolidations, in my opinion, you'll have a higher likelihood of going long in consolidations, going against all the people that were trapped. Because I'll tell you this, every day and every minute, there's always a group of people out there that think that with their own intuition, they can call tops and bottoms. And we just can't. We can't, and it's impossible. Okay? It's the same thing, if we have a trend down. If we have a trend down that started all day, and then the market starts doing this, buyers will come in. Buyers will come into the market, and they will say, okay, now the market has to go up. No, it doesn't. And it will continue down. It will break. I think I lost my cursor here. Where is it? Sorry, guys. Here's the cursor. Okay, so it does this, and then it continues down. And then it does this again, okay? And as hard as it is, okay, as hard as it is to short this market, and remember, it's hard to go against your gut. It's really hard. Part of trading, most of the decisions you'll have to go will be against your gut, but there will be the right thing for the market. And there's a specific reason for it. Because how a group thinks versus individual thinking, it's day and night. That's why we suck at predicting. We suck at predicting elections. We suck at predicting economic results. We just, and there's a reason for it. It's because it's just, we're trying to anticipate a large group of people from an individual standpoint, and then it doesn't work. At this point, you have to, I shouldn't say you have to, it's your choice, but I would short, okay? And then it continues and it does this all day, and again, your group of people think the support and this. Those resting periods, those consolidation periods, in my personal opinion, they trap the most amount of people. More than the breakouts, more than the news traders, strong trending days would trap more traders out there. Okay. Now we have a trader here, Ben, who knows order flow way better than me, and I'm sure that one day I'm going to bring him here because I want to show on the market profile how it's done and seeing the buyers and sellers. But I would assume, Ben, that during those consolidation periods you can actually see it on the charts and on the flow, right?
Yeah, absolutely. And I was going to say that those ranges that you're showing, those are the areas obviously that people are either scalping and getting in and out. There are also, institutional buyers that need the price to consolidate so they can, liquidate or take a position. But somebody wrote on the forum that, what's your style, what's your trading style, and my response to that was, your trading style is whatever works for you. And you mentioned this the other day. So my trading style is, I like to trade in the ranges because I always enter the market passively, so on a bid or an offer. And there's many times where I'll get filled. It won't go against me even one tick. It'll rally, let's say 6 ticks, and then sometimes when you can see it well enough, you can even reverse at the top. So just going up and down, and then when it goes past a certain point, that's your stop or that's your exit. But
My
you can
point
see that in
was
the
that
order
you
flow.
actually see on the actual candles here, the actual buyers and sellers, right? As they accumulate, right? So
Yeah,
you can see the
absolutely.
quantities, right?
Yes, on the
Okay,
cluster chart.
okay. That's fantastic. Okay, Ben, thank you. I
Yeah.
appreciate your input. Thank you for joining. All right. Um, okay. So just remember, okay, I don't know if I said it in other webinars, but uh, uh, remember your job of your job in the market, and as funny as it may sound, is to make money. That's your job in the market, right? There's nothing, it's not philosophy, it's just, your job. But the job of the market is to really spit you out all the time. That's the job of the market. Your job is to stay in and make money. The job of the market is to spit you out. If you really understand this relationship, you'll understand, what you're up against. You will respect the market. The market does not move in ways, okay, that are directed at you personally. The market does what it does, right? It goes up, it goes down, it goes sideways. But the reason that it spits us out, it's our wrong interpretations because of our emotional decision making. So again, as I said before, we cannot replace emotions, but what we're trying to do is build a foundation and mechanically understand the mechanics of the market, of how others behave in that group, so you can understand, okay, you can have some lucky trades. You can go into a counter trend, and you can, for example, let's say, let me see this little damn thing, I can barely see it. Well, let's say here, okay, let's say it didn't go down, and from here it just started shooting up, okay, and you made money. I want to tell you this, okay, fine, this little thing is profitable, but let me tell you, it's a coincidence. It's not that you traded with the odds. It's not that you did something, calculated. You could have. You could have. I'm not saying, but majority of the time when you have a very strong down market and you just took one thing, continue doing this all day and you will lose out. Because the market, if it's trending down and you have all those consolidations, at some point you're gonna say, okay, I caught another bottom, and the market will just continue to this, just would go down. So just remember, consolidations are, um, are important. One
Hey,
more,
Matt, can I ask a question?
yes, of course.
Yes, about those consolidations. If you don't have a real strong trending day, um, what's your opinion on being able to predict what side of the trend, or sorry, on what side of that consolidation range it might break out on within the consolidation itself? Do you think it's possible with specific time frame bars to get a feel for what side it's going to break out on?
Well, okay. So thank you for your question. I would. It's a good question. I would not use any word that says the word feel. Don't don't even try even use anything as far as feeling. The question is always this. Okay, this is what I ask myself. Where did the market come from? So when you look at the consolidation period, okay, let's say that the market was not, okay, let's say that the market was not very strong trending the day and you go into a consolidation period. Look at other time frames. Where did the market come from into the consolidation? Did it come from 3 strong days before, 2 strong days before? If it came from strong days on the upside, I would say that the likelihood that the trend will continue to go to the upside. So always judge of where did the market come from. Look at the charts, look at other time frames and say, where did it come from? Did it come from a weak market? Did it come from a strong market? If it came from a weak market and then consolidates, I would sell. Now, some people say, well, it was 3 days up, it must correct. No, it doesn't. It went down for 3 days, it must go up at some point. No, it doesn't. No, it doesn't. It doesn't work that way, So again, there are obviously consolidations that happen all the time, and it could be in a very, very boring day, and it could be in a choppy day. But I always look at, okay, where did it come from? If you're trading 15 minutes, where did it come from in the last hour? If you're trading, you can use 4 hours before, you can use days before, but always ask yourself, where did the market come from? And where the market came from, that's the consolidation you should look for. Now, again, just remember one thing. Everything that I'm saying, you might have a different method that, it came from an up day, from 3 up days, and there's a certain consolidation throughout, but your indicators tells you that it's going down. Okay, let's say that it says your method tells you that it's going down, and now you're saying, but Matt said that it should go up. So still stick with your method. However, if you see the market breaking to the other side, don't wait too long. Just at that point, don't wait too long. Because at that point, you're like, okay, you know what? The market was strong before. I shorted it. It's consolidating. I thought there'll be a short-term correction where it is. Now, markets, in my experience, not on a single day, not because people always like to give those single examples, but generally speaking, if you have a very strong day and you're shorting the market, the risk reward becomes very small, because the likelihood in a strong day that all of a sudden when you got in, it's going to reverse, it's not there. So let's say, looking at at this chart, not this chart. Again, I'm having difficulty. Okay, so let's say you shorted over here. Okay, let's say you shorted over here, and that happened during a day that the market was kind of choppy and boring, right? And said, okay, I think so, whether your methodology, whether moving averages, support, resistance, RSI, whatever the case is, pointed to this. At least if the market continues all of a sudden to do this, and it breaks out of the consolidation, get the hell out. At least now you know, and part of the time, not part of the time, many times is to know when to get out. This is why you have traders who will say, you know what, I'm wrong 60% or I'm wrong 70%, the good traders, right? They're not afraid to do that because the other trades make it up for it, right? So it's not, some people mistakenly, beginners say, what is the success of your method? Right? How good is your method? And people say it's good 80%. It's not the right question. The right question is, where do you maximize, your profits, and where do you minimize your losses? And then that question becomes very irrelevant. Somebody could say, you know what, I have 25%, but when I do it, it covers all my losses of 75%. So that's important. I hope I answered your question.
Yes,
Um,
thanks, Matt. Yep, that was good. One of the things I've noticed with the E-mini is that, and I know that's a pretty particular market, but every sort of third or fourth day, it will exhibit a strong trend up and then down and reverse, and then another strong trend back up or down, or do that a number of times. And it certainly gets interesting trying to decide whether that trend's going to continue whether it's kind of reversed that initial trend or not. And so, yeah, it's interesting. Thanks, Matt.
of course, of course. Well, listen, the challenge of when they say trade with the trend, part of it is this, it's everybody thinks it's such an obvious thing. Say, okay, trade with the trend. It's going up, it's going up. It's not exactly like that. It's better on a strong day to wait for consolidation and market to move and not just jump in out of emotions, but let the market relax, go into some sort of consolidation and then enter the market. You might enter the market at a higher point, but at least at that point, you will have the ability to. Jake, I think somebody's trying to get into the room. You can let them in. So at that point, at least you are with some trap traders and they're trapped and they're not doing anything or they're getting stopped out. Well, think about this, okay? If somebody gets stopped out here, okay, at this point, and they went short over here, what do they have to do? They have to buy back the position. That's what they're doing, right? I mean, if you get out of a short when the market tops and the market continues up, all the short, at some point they'll keep buying and they'll push the market higher. Part of their stop losses will go higher. Now, stop loss disclaimer, just remember, sometimes you might not get out exactly where you want. There could be slippage, and sometimes market conditions are very tough for stop losses. So just keep that in mind as well. Okay. Okay. Another thing where to watch for, I would say, I was thinking of all the times where you could have a little bit of, trap traders is basically when you have if you have a reversal at the open. So as you know, the cash market on the stock side, and maybe it doesn't apply to those of you who trade gold or crude, but some of it could correlate because 9:30 is the opening time for equities, EDT, Eastern time. So you might start with a negative move on the overnight, right? And as we go into the market, let's say after 3 days, of negative, some people will be impulsive, will say, okay, I'm going to short the market now, and it opens and they short it right away. And then the market completely flips, from being negative overnight to going all of a sudden positive. That's another position that you will find trap traders because they came in negative, they saw negative overnight. They might come and say the market must correct. All of a sudden it flips, it goes up, you do that. So again, those are things to look for. It's not a method in itself, but just when you trade your method, just remember if all of a sudden, I'm giving you an example. Let's say you went, short somewhere here. Okay, so you went short around here in this area. Oh God, this thing. Okay, well, Picasso, I won't be in this lifetime. That's for sure. Okay, so let's say you went short over here. Okay, and then the market goes down, and now now it's consolidating. So one of the things that it will instill is fear in you, right? Because all of a sudden you stop your gains initially were good, but then it starts consolidating and it goes up, it goes down, it goes up, it goes down. And this is where the trading is becoming extremely tough. This is where it becomes really tough because at that point you're thinking to yourself, oh, what if I lose all my gains, right? And that's where you get out too early, or you say, okay, maybe the market bottomed. I'm going to go in reverse because I made some money. I'll make a little bit on the upside. And then this happens, right? So if you had, a down day, don't be afraid of consolidations. If it goes back to your entry and goes above it sometimes you will have profitable trades that will turn into negatives. It will happen. It's just part of trading. Everybody takes it so personally. So I always look statistically at trades and I say, okay, why wouldn't some trades statistically, out of all the trades that I'm going to take, is each one, are some of them going to be amazingly good and then they'll turn into a losing trade, but I did everything right? Yes, it will happen. It will happen, but at least you know where to get out. And what do most people do? Okay, so they'll short over here. The market does this, and they're like, okay, you know what? And all of a sudden, okay, let's say it didn't go down. It started going up. But they remember in their head that they were profitable. And they'll hold on to it thinking, okay, if the market comes back down, then I'll make it. That's it. It's a new territory. It's a new condition. That's it. What happened before, where you entered, has nothing to do with the market anymore. There's nothing. The market doesn't know that you entered over there. Water went onto the bridge. Now you have to decide what it's going to do. However, I do want to tell you that you should not be afraid of consolidations after you trade. Let's say you short the mini S&P and now you're 3 points in the profit and it's $150 and the market was weak that day and you short and it goes into consolidation. Patience. Have your exit. Decide where you're going to exit just in case you're wrong, and have patience. And it will honestly play in your favor. Okay? So we spoke about that. Now, the last thing that I'm going to do, theoretically speaking, is talk about another concept. So there are two types of trap traders. There are trap traders that are in the market, okay? And there are trap traders who were stopped out of the market and are dying to come back. And you really have to understand that, right? So you have somebody who, for example, the market went down, it went down all day and they went long and they got stopped out and, and then the market rallied to where they should have been and they feel they missed an opportunity. And they'll go in and they'll short it again and they'll go in and they short it again. So there's always people who are coming back. Trapped is not always trapped in the market with a position. Sometimes they're trapped psychologically. We're trying to come back. Now, since this industry is, majority of the people that I come across are men, they're driven by ego, right? Men are driven by ego. So men want to make money exactly at the same spot where he lost with the exact same position. So the market was going down all day. They bought it. They got stopped out. Now they're not thinking, okay, maybe I should trade short. Flexibility, I should be short. Maybe it was a mistake. No, they'll go and they'll go long again because they're going to recover their losses exactly the same. They're going to recover their losses the exactly same way that they've lost it the first time around. And those are trap traders too. And then again, they will go into consolidations again and say, okay, now it's the right time. Now it's the right time. Or if the market goes up, they'll short it. And they'll keep on doing it the whole day repetitively, right? Just repetitively. So it's important to keep that in mind. Again, I don't think, I don't look for trap traders all day. That's not, and I don't think it should be your job either. You just have to understand that if you're making, if you have a profitable trade in a strong trending day, you might take it into consideration saying, you know what, I think, people will keep on buying it. My third consolidation, probably people keep on buying it, at this point, and it will go down. So I should stay short maybe until the end of the session. Okay. Any questions so far before we go into the charts? Okay, Jake, let me just, you can take out the point. Okay, and you can, let's go to Optimus flow. Thank you. Okay. So, okay. Oh, it doesn't show. Okay, I guess it's past 5 o'clock and I didn't do a GTC. Okay, that's fine. That's fine. No worries. I understand. Okay. So, in preparations in today, for this Jake, expand this a little bit for me. No, not this way, just the chart. Yeah, here. Yeah, higher, more. Perfect. That's it. Jake reads my mind. It's amazing. And he knows exactly what I don't know how to do. So, all right. So, I wanted to show you here a trade in preparations that I've done. Obviously, I taken this trade earlier in the day. Just to maybe kind of illustrate a little bit of logic that happens throughout the day. Okay. So I went long over here. Okay. The market overall, the sentiment, I'll explain every single thing that I've done over here on this trade. Okay. First of all, the market is strong. Okay. I think one of the things that misguides traders when they trade is the question is, what will happen if I lose? Well, what if I lose? If they ask this question, what will I do if I lose? Or what happens if I lose, or any kind of form of question that leads to that, basically you will start counting on your intuition. That's really what will happen. You will start counting on your intuition, and you will do trades that are counter to your method, just trying on the gut feel to make some money. So first of all, this is the micro ES. This market has been very strong for a very long time, and I know people say, well, how do you know how long it's going to last? I don't know. I don't care. It's not my job. It can continue going up for the next until the end of the year, as far as I'm concerned. It can collapse. Everything can collapse tomorrow, and I'll deal with it then, which is fine. But here's something that I want to point out to you. Okay, what you have to watch out for, okay, is those the candles with the long weeks. Like, for example, if you look at this period and you ask me, well, do you think there's any trap traders here? I have no clue. No idea. Are there any trap traders here? No idea. But I would tell you that there are some people who are on the way down, bought over here, and they were taken out here. This long week just boom, takes them out, market continues. Then it starts going down and down and down, and it continues the trend, and it's going down. So the reason, we're short-term traders, right? We're trading things short-term. Here's what I saw here. So first of all, people who were long were kept on getting stopped out here, right? They were stopped out here. At some point, some people, what they've done here, they said, okay, I'm going to short because it just keeps on going down and down and down and a lot of red. And now they're getting all the way back in. They're all long. Market starts going back down again. Okay? Stops them out again, a little bit of a rally. Now starts going back here. And here's what I see here. Okay? I see here people who went long, and I see a bunch of long weeks like that, getting stopped out, getting stopped out, getting stopped out. So you have 3 of those long weeks, on the candle charts with those extended one thin lines, which basically told me, you know what? Okay, this market probably, because it had a very long trend of upside, a lot of the shorts who were a lot of the people who tried to get long were stopped out here, and they got desperate. That's it. Now new inventory of people will come in, and I executed the trade at the market, and I now went up. Now, my stop was here. Okay. Actually, the market is closed. It can't do it. But my stop would be somewhere around here. Because you know what? I figured if this consolidation stops, okay, it will continue. Now, obviously, some of you who will be critical will say, well, if the market was going down and it's consolidating, you should have continue trading with the trend. No, this market is very strong. It's a very strong market. To take short positions, you can take short positions. There are methods for it. I'm not a genius, when it comes to those things. just like everybody else, but I think that the odds are better in a bull market to go long. And tomorrow the E-mini S&P, sorry, the E-mini, it's right now, where did it close? 3,900. People will say, well, what if it goes to 4,000? Odds are better to go long at 4,000 long, and at 4,100 long. Now, will one day it will change? Yes, it will change. Can the market reverse one day? Yes, it will reverse. But so far, the charts, if we go, 1 second, we did here, okay. This is a 30-minute chart, and you know what? The market has been very, very strong. It just made a correction. That's how I looked at it. Just made a correction, and there were some people that were trapped here. Now, specifically today, just to give you an idea, okay? Maybe I got lucky, maybe I didn't. I don't know. But I looked at specifically at people at those long weeks, and I said, okay, people got stopped out here. The range on the day is, somewhere around the 10 points. I can squeeze a few points out of it, right? It went from 800, and I believe the entry was 894 and a quarter. Market settled at 1910. There you have 16 points, 837. There was one micro here before, so just consider it as if it was 10, right? So, and that's what happened. But again, it was really based just on the idea of, okay, those people were stopped out. They went long, and all those long weeks, and this is, by the way, why support and resistances are not precise science. Because somewhere, okay, let me see here. Do you see how the support comes in and in and in and in, and every single time it breaks? And people are like, oh, there's support. Okay, market comes back here. This is what they avoid looking at, right? Those long weeks that's on a higher time frame. But just to give you an idea how support and resistance is really not precise. It's just not precise. So when I said in the beginning, you have consolidations and things of that nature. You also have, I'm sorry, I said the breakouts, right? So then breakouts, people get trapped. So that's either they go into support, trying to spot it, or they're trying to put in the resistance. And many times, be patient when there's support. I'll tell you this, look, if you see this where they were taken out and the market rallies, you see how it takes a little bit of time into consolidation, and that's coming from a bull market. It's consolidating, right? And it came back and it moved. Now the market, since I entered, did not go in the position, where I wanted to go. Right? I mean, it didn't go to the high. I'm sorry, it didn't go to the high, but I still went with a consolidation period on a higher time frame and I went long. So in the bull market, when they say you trade with the trend, even your short-term trades, have to take that into account. Again, you could have a method. People maybe shorted it here and it went down here. Maybe they shorted it here, and they picked it up back here. I'm not saying it's not possible, but what I'm saying is, just those things you have to, the trap traders, the false breakouts, and anything else. It's just something to keep in the back of your mind to understand, if it happens. Let me see something here.
Matt, can you share with us what your stop loss point you were allowing for your initial stop loss for that trade?
Yeah, sure. So it was somewhere around here, maybe the 3,879, somewhere around here. Because, if you go here, those periods, they can take you out. I thought, look, let me explain the logic behind it. So as the market was coming down here, I saw those long weeks coming, right? I didn't know, and I just decided to wait. And waiting sometimes works in your favor. And then it started consolidating, right? And then but look, it took it out. And at this point, I decided that, you know what? They probably took out most of the longs who decided to go long. They probably took them out, as they were trying to, to pick bottoms. And again, feelings, whatever the case is, whatever motivated them, they said, okay, now that's the problem with. I'm going to answer your question, but part of the problem always, with intuitive or trading, when people trying to use their intuition, is that there's no risk reward associated with it. So there's a lot of fear that will come with intuition, as opposed to a method that you say, okay, I have a plan here, which could give you a little bit of an edge. But I thought at this point, just to answer your question, that most of the longs were already taken out, right? And I thought they will prevent them and freeze them. So when people get paralyzed, that's exactly when the market returns. So so it would be just here below here, right? Not exactly here, not this. Just give it some space here. I would say that would be the trade. Okay, to exit. I guess that's it. Any other questions? Okay. All right. Okay, guys. So it's almost 5:30. Okay. I hope that today was helpful. Jay, go back to the chat. We can remove it out of that. Okay. All right. So do me a favor. Okay. So just a few things. Okay. And I'm really asking you guys a favor, each one of you. So I believe that what I teach you, people charge a lot of money for it. I do it for free because I want to give you guys back. I understand that I make my living from other people taking risks. So this is how I feel obligated to teach you guys. I feel sharing information or anything like that. There's a lot of gurus out there that charge just idiotic prices, okay? Now, let me share with you how we get customers at Optimus. Either they find us online, or they find us through referral, or anything of that sort. We don't advertise, not yet at least. We will, because I really believe that, I was always more fond of building an infrastructure for existing customers as a foundation, okay, as opposed to going and spending money on Google ads and clicks and becoming an advertising agency instead of being a real broker. However, what I need from you is to give me content. So I'm asking you guys to please participate, okay, in the forum with each other, ask questions, share your screen, share your experience, start threads, whatever you can do in order to grow the community. Here's why. First of all, content, people will find us like that on Google. And obviously, we could potentially have more customers. So I'm grateful that way. That's one thing. Second thing is that, we cover topics over there that are really good for traders. So for example, last week, I wrote about what's your emotional state, right? And unfortunately, we had only Ben who came and participated, right? Go to that thread, and put every day what you go through as a trader. You might not follow my instructions in the state of mind as it should be, but every time you trade, write it down. It's a good exercise for you. You will see what other people are struggling with, because those are real traders. Those are real traders, real money, real life dilemmas, and everything else. So participate as much as you can, right? So the challenge, so it will be there. Okay, Jake, can you post it? Post that state of mind community thing as well. Okay, so Jake will do it. So this week, okay, as you see there, I want you to go. First is to a thread that was started there, okay? What's your trading style? On the community, I'm referring to community.optimusfutures.com, right? So what's your trading style? You go there and you put your style and you write, okay, so here, that's it. What's your trading style? You go there. This was started here by Cole Sean, some other people write it. This also gives me an idea, okay? I read this stuff. I really, really do. it gives me an idea of where I could come up with topics that would help traders. It's not easy for me just to find topics and just, you know, talk about them, because I want to keep on talking about practical stuff, right? I don't want to make those, you know, there's so much garbage out there on the net. I mean, it just, you know, like for a beginner, it's just sometimes great, but it has no value in real life trading. So I want to focus on that. So write as much as you can. What's your trading style? I will give you 3 months of Optimus Flow with data feed, DX feed, absolutely free of charge. Whoever, you know, whoever wins this, but more than the prize itself, it's obviously something for you to consider. Okay, now I can click on this. Now there's also this thread, okay? And this is, okay, talks about what is your mental state when you trade, right? So I kind of wrote here a little bit of a guideline, right? What happens when you're not trading? What happens when you're gathering data, when you place a trade and everything else? You don't have to follow this format to the T, right? But essentially, the more you write about the process you're going through, the more, first of all, others hopefully will comment, and I will see it as well, and I can comment. Now, not a magician, but I'll try to put you in the right direction. Because the way I thought about the market once, you know, I treated it like a crystal ball. I thought that I need to guess the direction of the market. I thought that, you know, every single trade has to be perfect. I didn't understand win ratios. I didn't understand that, you know, what it means to handling the risk. So I just want to put you in the right direction. And the more you write in this forum about yourself or start new threads or anything like that, it would really help the community, and it would help Optimus Futures. And in turn, I promise to come back and teach you as much as I can. Okay, so on that note, I'm going to give you one more chance to, if you have any questions for me, be more than happy to answer it. Okay. Jake, did we have any questions in the thread, in the chat itself, that I missed out because I wasn't really reading? Oh, you guys write a lot.
Matt, I have a quick question. When you made that trade today, were you looking at order flow at all when you entered?
No.
Or was it just all charts?
All charts.
Okay, cool.
All charts. I'm very fascinated by order flow. You know, and I'm going to bring you here, you know, in one of our webinars so you can show people how to use it. The problem, it's not a problem. Just like technical analysis is just such an imperfect product, you know, it's not like, you know, charts give you odds. That's what charts are, right? Charts give you, they're not a predictor of the market. They give you odds. And that's how I treat it. So it's not a perfect analysis, you know, but you have to use it. You have to learn to use its limitations. What I'm trying to understand about order flow, you know, is really all the numbers that are flashing, you know, like all those micro, you know, 50 by 100, 100 by 50, you know, it's like all this, it's like strobe lights all day, right? Yeah. So what I'm trying to do is really understand, you know, which factor there I should really look at and what noise I should avoid. Because, you know, everybody's pushing that notion on order flow, like institutions are trading and the big lots and, you know, and this and that. But the reality is that institutions place orders and remove orders. That's what they do, just like every other trader, you know, they just come and go. And they trade for different reasons. Everybody thinks that you know, institutions have some crystal ball and they know exactly what they don't. That's number one. Some of them are hedgers. Some of them, somebody might go and short the S&P because with a big order because they have to hedge a stock position or a stock portfolio. Let's say there's a mutual fund and a pension fund decided to allocate another $1 billion to them in stocks. They have to hedge that position. So they will go to the market and they will put 2,000 lots, you know, of E-mini S&P. And everybody looks at it and says, oh, they're short. No, they're not. and they couldn't care less if the market went against them at that point. They couldn't, because it's not, they're hedging a position. You know, they're not trading it as a direction, they're hedging it. And essentially, you know, if it doesn't mean that even when there are 2,000 lots, if the market is very strong that day, it doesn't mean that they will bring it down. And everybody's like, oh, institutions are short, they're gonna bring the market down. They don't always bring the market down. So what I think is really important in every method that you learn, whether it's candle charts, whether it's order flow, whether it's Fibonacci, whatever it is that you use, what is the limitations, right? So that's what really you have to do, is really understand what is truly the limitation of the trade, of the method that you're using. Once you know the limitations, you don't treat it as, I don't understand why. Because then you say, okay, the market does whatever it does. My method, you know, helps me. I have to stick to a method. I have to stick to a risk reward, but it's not the Bible, right? There's only one Bible. That's it, right? And definitely technical analysis is not the Bible of the market. It's a tool, just like everything else. So again, to your point, order flow, I think that you know, I'm very fascinated and interested, you know, but I think even for yourself, when if you were to show it to others, show them the limitations, right? Show them what it doesn't do, right? Show them how, you know, bids and asks flash and disappear, and you're lost. You're like, where did it go, right? So, and you know what I'm talking about, right?
Oh,
So
yeah.
it's important to know, you know, of course.
Thanks, Matt.
So no problem, anytime. Okay, so all right, Jake, did I miss any questions? I still don't know if this question. Okay. Oh, people asking, you look at market internals, take when taking trades. I don't know how to look at them. You know, what's interesting about all those internals, a few years ago, you know, we had a group of people that came to Optimus as traders and were asking for all those ticks and trends and this and that. And then they said, the calculation is not right. I'm like, what do you mean? So it turns out to be that CQG calculates it one way. Rhythmic calculates it a different way. This guy's at DTN calculated a different way. I was like, can't you just... So they said, well, if there's more stocks being bought and sold in the New York Stock Exchange, the market is going up. And I was like, well, doesn't the chart show you that it's going up? Do you need to look at that? So I don't know how to look at it, okay? I'm not trying to put the product down. I'm just saying things like tick or trend and those internal indicators to the stock market are something that, you know, I would love to learn. And maybe it would add a little bit of a direction. The one thing that I think really helps is the VIX. The VIX measures the volatility on the options, right? If the VIX volatility is low, the ranges will be low. The potential for profit is could be potentially lower, but also at the same time, you don't have to put a huge stop loss. So VIX is something that I think people should take a look at, right? It gives you that indication. Okay, Doc. Okay, what is the contract size to use in each trade? 64,000 question. Listen, it's your risk tolerance. You know, when you're a beginner, trade single lots, trade micros, trade single lots. That's basically it. I don't know how much money you have in the account, but you know, if you're a beginner, don't try to maximize trades. You know, your goal is to control size and learn and learn and learn and learn and increase your odds. I'm really not for, you know, want to gear up and leverage. So at some point, what you have to pay attention to, Doc, is you have to pay attention to where does your thinking break? At what level, right? How many contracts break your thinking level? And at that point, you know, you stop and you say, you know what, I'm not ready for this level yet. I'm going to go back to a level that I can think straight, right? And that's what's important. And I can begin to tell you how important that is, because no method in the world, doesn't matter what I teach, if you sweat through it, you know, and you're not calm, it's very unlikely that you will succeed. So again, size, you know. Okay, Amy, okay, you're very, very welcome. Okay, any other question? Okay, Doc. Okay, determine this. Okay, so somebody answered that. Okay, if you have an opinion, listen, start a thread. You know how much, what kind of position should you take in the marketplace? Start it. You know, people will come, and you can say, and go up for a minute, Jake. Okay, here, you know, Vi, you know, came and he said, Vi, go start a thread. You know, we can, and we can discuss size over there. Okay. Sergi, you're asking if you can have a record of the, yes, we will post it on YouTube and you will see it. Absolutely. Will be more than a pleasure. Okay, any other questions, Jake, that I missed out there? Okay,
I have a question if you don't mind me asking there,
yes.
Matt. And this one's actually geared towards Ben. I wanted to ask you this question. And just for context sake, I'm like a super new beginner trader. When Matt talks about beginners, he's talking about me. I have my background. I was trading equities, and then I'd learned about futures through market profiles, and that's where I kind of got into it. And so I've just essentially been practicing for the past some time. And I liked what you said about consolidations. My trading style is something a bit similar that I think that I would like to kind of get better at, which is scalping on consolidations. And I've really tried to hammer in order flow. That's something I've been trying to get good at. And my question was, do you have any sort of like reference material or anything that, you know, that gave you that aha moment? Like for me, I've been trying to read the number bars, or that's what they call them on Sierra charts, or footprint charts. And I'm just having like the hardest time trying to understand them. Do you have anything that, you know, that gave you a leg up, whether it's a book you read or a channel you watched or a course you took that really kind of helped you out understand them?
You mean
No, thanks.
order?
That's
Yeah.
yeah,
Oh, Ben, sorry.
yeah.
A question for Ben.
You
Sorry.
can you, Matt?
No,
Can you mute?
Ben, it's
Can
for
you
you.
mute,
What?
Matt? No, I'm joking. I'm joking. No, thank you. I think that's a good question, because when I started trading in Chicago, you go in, you see all these people succeeding and making money, and you're like, whoa, how do you do it? So then you start looking for what they do, and that's good to a point, because you do need to learn from other traders and other successful patterns. But ultimately, it comes down to, I think, finding what works for you. So when it comes to market delta and order flow, I would say my biggest suggestion is to demo trade just on the DOM, um, and no charts. Just watch that for a half hour and trade one lots. And you'll start, if you eliminate all the other stuff and, you know, indicators, and just focus on that, you'll start to see patterns where it's really just pattern recognition. And you'll start to see a price flip a few times on the top of a range, and you'll know it's a range even if you don't have your charts, because you're going to be watching the ticket go up and down. So I would say that's a great way to practice, even for myself, like eliminating everything else and just getting in tune with it. But what I'll do is I'll create a post about that, and kind of like the aha moment, because it wasn't like a, you know, just wake up and like, oh, whoa, this makes sense. It's like over time it starts to, and then you get better, and then you incorporate all these other things that you've had experience with, you know, that you've seen trading, you know, equities and so on. What Matt's talking about, and other people. So that would be my advice, but I'll definitely focus on that on a post, and give you some videos. I took some good stuff today too. So
Perfect. No, thank you so
does
much.
that help answer? Yeah.
Yeah, it would. And then just a suggestion as well. You don't obviously have to do this, but and if you could also like I don't know if I learned this wrong, or if I kind of bought into someone, but basically one of the things that I'd learned about, like, the DOM was something that, you know, I'm very keen on learning. I've been working on that. When it comes to the footprint charts, for example, one of the things I got told is that if you can understand footprint charts, you almost don't need a lot of these market deltas that are coming in. All of that information is there. If you could even, you know, point some sort of direction for me in that sense, that would be great as well. Just because if these, like with the DOM and the footprint charts, seem to be such crucial tools when it comes to order flow, I'd like to have a firm grasp of both of them when I do eventually start trading heavy volume.
I think the CBOT at some point, if you Google CBOT market profile,
yeah,
I think they put out, because it was, I believe it used to be their trademark before this, there were two exchanges before. So there was the CME and there was the CBOT, and there was COMEX and NYMEX, and there were four different exchanges. And then the CME bought all of them together, and it's called the CME Group. But the CBOT back in the day had a PDF, and they had the trademark on market profile. I don't know if they lost the trademark or not, but if you Google, I think CBOT market profile PDF, you should really find the preliminary, kind of looking at that. And I don't think it changed since then. A lot of look, since day trading became, I would say, in the last decade, such a popular thing, everybody's pushing market profile. And just remember one thing, listen, if you can't wrap your head around it, don't struggle with it. Because you know what? Listen, edges are being lost when everybody's looking at it, right? Your edge, I never understood what this word edge was, because I always thought that it's just something hidden that others don't see or this, but there is some truth to the fact that everybody's trying to learn this method, and at some point it just becomes like fashion. And in trading, there's always fashion. If my suggestion to you, if you can't wrap your head around it, don't struggle with it. Look, I'm going to tell you something. I love the market. I don't love the markets. I don't like the markets. What I do like is trying to figure out, what's going on in the market. I would say most of the time. I don't like the markets because it's fear, greed, people, gossip, but if you can find something that you actually enjoy doing and implementing, that's where it will come from. Look, I'm not good at math. There's some people out there that use statistical models. Look, back in the late, you seem very young, so I'm going to tell you, I don't know, I would assume you're in your early 30s, maybe late 20s.
28 actually as of January, so you're right on the mark.
Okay, so how old are you, if you don't mind me asking?
28.
28. Okay, so 28. Okay, so when you were around 7, okay, when the Nasdaq was going through the roof, I mean, and the .com just started, you would go, okay, to the back of any bank, and you would see hundreds. I was in those banks, right? I mean, I went to visit a lot of banks at the time. In the back of every bank, there were hundreds of people who were trading the Nasdaq, and they were day traders, right? And then the Nasdaq collapsed, and they were all wiped out, completely wiped out, right? And then what became really the demand became then for quants. So then banks didn't say, I want a trader, right? I think, did I lose? Oh, sorry. I can't see Jake. Okay, sorry. So then the bank said, we don't want traders. We want quants. We want people who have PhD in statistics. We want people who have PhD in physics and math and computer science. Now the biggest thing is data, right? People who can analyze large numbers. Now, that is popular. But if you don't have the skills to look at it, then you can't. Now, here's something that I admit to my faults. I have ADD. I suffered from ADD all my life, right? To look at something like what Ben does, to look at the dome, for me, it's just a bunch of strobing lights. It's very, very hard for me. My only suggestion to you is then don't force a method on yourself if you're not feeling comfortable implementing it. There is no aha moment. Let me tell you this, there is no aha moment. Most of the time is, I'm a complete idiot, right? That's the aha moment traders have, right? So you will not have this aha moment. You will grow as a trader with very small increments and with experience and everything else. And don't try to follow a method if it doesn't come intuitively to you, right? Work with tools that you feel comfortable with, and you will be fine. It is 100% true, and I believe in it, that you have to find, I'm not an artist, and I'm not looking to be an artist in the market, but you have to find your own individual comfort in the market. That's what you have to find. And to realize I'm good or I'm not good. I'm going to tell you something. Clearly, a lot of people in my surroundings are in the trading business, right? I've been in this business. I started a little bit younger than you have. I've built a network of people. You don't think they come to me every day and they say, oh, this, look at this, look at this, look at that, look at this. And I don't. And I don't. You know why? Because it's not in my DNA to look at exactly the same things that they do. You know, this is your first webinar. So I'm going to give you a little tip of what I said to everyone in the beginning when I started those series. I'm not trying to teach people how to trade. I'm not. I cannot teach people how to trade. I'm not a guru or anything else. What I'm trying to do is really in all those seminars is build a foundation for you to build upon, right? The foundation of risk management, the foundation of decision making. As a trader, you are a decision maker. That's a job of a trader. People think it's like predicting the market. It is not. Being a trader is not about predicting the market. Nobody knows. You know, it doesn't matter if it's CNBC, CNN Business, or Fox Business. They do not know. They're all talking heads. They love to talk about the markets. It's theater. The job of a trader is to make good decisions. If part of good decision is not force on yourself something that you're not feeling comfortable with. So imagine that when I knew 20 years ago that the quants are coming, right, and I would fill my entire library here of books with mathematical models, right, I would be nowhere today. I wouldn't understand trading because I would be like, I don't get it. If something does not, I'm not saying don't learn order flow, but what I am saying, if you feel that something does not come intuitively to you, just don't do it, right? Don't do it. I'm not going to mention the name of the author, but there's a book out there, okay, that everybody swears by it for a price action book. I don't insult the author. But it's like people treat it as the Bible of price action. You know what? I donated it to the library. It was a bunch of, like on forums, they said, oh my God, it's such a good book, it's a this or that. And I started reading through this. It was an interpretation that for every single tick in the market, he had an explanation of why it happened. Complete, oh, this went up because of this went down because of this went because of this went because of this. Every chapter was built of 400 methodologies that just confuse beginners, but beginners love to say, wow, look at that, right? And what I didn't like about this book, right, is just it took out completely the concept of simplicity, completely. So I'm just saying, use your intuition. Equities is a business where I would say technical analysis is a lot smoother, okay, in my opinion, on this, because futures have leverage. You just have to take your skills from equities to a little bit of a less of a smoother market in technical analysis and learn how to control leverage. And as a beginner, go with micros. I think that the micro NASDAQ trades more than the mini NASDAQ. I think the volume on it is higher. So there's nothing wrong with, potentially looking at that. So I said, I think, you're talking about took a lot of work to understand, but it has been worthwhile in my experience. Okay, well, listen, here, Vi, he thinks we know who we're talking about. I personally couldn't finish it. I highlighted stuff. I tried to do this. I was like, you know what? At some point, I was like, why am I forcing myself? So anyway, it's a little bit of a long-winded explanation, but just come, do whatever is natural to you. That's all.
Yeah, thank you. I appreciate that. So any advice is good advice for me starting out. So.
Well, absolutely. And we'll have and we'll continue having webinars. Okay, guys. So somebody asked here if I use 15-minute charts. I didn't want to be rude. Yes, I do. Look, if I did not answer anything here, or if you want to start a debate with me, do it on the forum. I would love to have somebody with a different opinion, a different point of view, and I respect it. I really, really do. And we both could be right and we both could be wrong. And that's what happens when it comes to the market. So I wanted to thank everyone who came here today. I look forward to seeing you in the next webinar. I appreciate taking the time. If you are in one of those cold states, just keep warm. Do me a favor, right? It's a little bit easier for me to say because I live in Florida, but I lived many years up north, 18 years. So I did scrape some ice off my car. I did get some salt on my car. I did get, days that it took me 3 hours to go from one stoplight to another. And I know what it goes through. So keep warm, be good, take care of yourself, stay safe, and we'll see you on the next webinar. And remember, there's a substantial risk of loss in futures trading. Past performance is not indicative of future results. That's it. Best of luck, and thank you again. Take care. All right, guys. Thank you. All right.
Thanks, Matt. See you.
Okay. See you, Ben.
Bye,
Take
guys.
care. Okay.